Alright, so next we talk about the statement of comprehensive income. Now, this can be in two statements. Well, there are two statements in it, and they can either be presented as two separate statements or one statement with two sections. So the two components of these statements, the first one is the statement of profit or loss. Or the profit or loss section. In some jurisdictions, it's just called the income statement. Then the other one is other comprehensive income. The other comprehensive income section. In some jurisdiction, this other comprehensive income is referred to as statement of comprehensive income on its own, while the profit or loss will be referred to as a statement as the income statement. So we have income statement, statement of comprehensive income. It can be really confusing because accountants cannot seem to sit down and agree on a naming system. But just know that there are two things to be shown in the statement of comprehensive income. Now, the first section, profit or loss, ends at profit for the period. The other section takes profit from the period and adds other comprehensive income, which could include things like revaluation gain. And then the results is total comprehensive income. All right. So of course, while you wouldn't use other comprehensive income too much in preparing financial statements at this level, when you are discussing what the various standards require, you would of course have to make reference that particular disclosures are to be made in the statement of other comprehensive income, that particular expenses and particular items of income should be presented in OCI and not in profit or loss. However, note that in more advanced levels, you will of course be required to either prepare extracts to other comprehensive income or prepare the full statements including other comprehensive income. Alright, so now what do you have here? Now there are some minimum line items. Minimum line items are the items that must be presented on their own without being aggregated with other items. Okay, and in this case, revenue is a minimum line item. Finance costs is a minimum line item. Share of associates and joint ventures profits is a minimum line item. Profit for the period, income tax expense. Now this means that other than what is stated as a minimum line item, every other item can potentially be aggregated, okay, and presented either by nature or by function. So all this means is that the rest of the items, which could include things like rent, investment income, distribution expenses, depreciation, depending on the way you are on the classification of expenses method that the preparer is using, they can be aggregated in one form or the other. And in this case, there are two major classification for expenses. There's classification by nature, classification by function. Now, when it comes to the by function classification, it's also referred to as the cost of sales method. And for anybody who has a bit of experience with accounting, this is the class that we are used to. Now, which means that expenses are either classified into cost of sales, administrative expenses, selling and distribution expenses. So within one, so all expenses are to be classified in one of these three classes, depending on what the expense is used for. That is the function of the expense. If the function of the expense is to generate sales or to produce the primary service or product, the primary good or service that is being sold, then that item can be classified into cost of sales, including wages of factory workers and depreciation of factory expenses. They can all be classified into cost of sales. Now, if the function of that expense is to run the office, then it is administrative. If the function of that expense is to either stimulate sales or distribute the goods and services, then it comes here. So salesman commission, promotional expenses, there will be selling and distribution. Okay, depreciation of motor van of delivery vehicles. Delivery vehicles can classify as selling and distribution expenses. The division of office equipment, on the other hand, will be administrative expenses. So there's a bit of judgment required when you're trying to classify between each of the three classes. By nature, okay, all these arbitrary classification will not be necessary, as all items are aggregated by nature. Meaning you will see items the way they are, the way you normally understand them. All rents will be in rents. All depreciation will be in depreciation. You won't have to classify depreciation between cost of sales for factory depreciation or selling and distribution for delivery vehicles, but all depreciation will be placed in depreciation. Okay, all marketing expense will be in marketing expense, and so on and so forth. Now, obviously, this will be easier to prepare. This will be easier to prepare. It also lead to a lengthier statement. This, however, usually provides more relevant information. In most cases, there are cases, however, where, for example, for a hospital, where presenting by nature will be more relevant than going ahead to present by function. Alright, so in the next video we'll be discussing the statement of changes in equity, after which we will take our question as an example.